Let's face it, the only reason you started trading the lower time frames is because you saw other traders seem to be smashing 1 to 100 hour trades, and you thought that was the only way to truly become profitable. The more you delve into trading smart money concepts on the lower time frame, the more information that's consumed. And that's not necessarily always a good thing. They say most traders fail, and I personally believe it's because they give up too soon. This is a long game. It took me almost 6 years to find consistency, and most people just cannot fathom working for free, early mornings, late nights and weekends, after a long day's work, working a 9 to 5, raising a family, for 6 years. So they give up too soon. So what if you could flip it on its head? And what if there was another way of trading that was more simplified and that would remove the anxiety that you feel during the day where you're at work or you're looking after your children and you feel like you should be at the charts because you're scrolling Instagram and you're seeing other people hitting these trades and you've got that FOMO, that fear of missing out, that you're not in that setup? What if there was another way of really simplifying it and actually spending less time at the charts while also increasing your strike rate and making sure at the end of every month you are actually in profit? And these are the conversations that we started to have over at Evolution Markets at the back end of 2022, when we were considering the feedback that we were getting from those who are our students and those who are not our students. That the amount of messages that I get from people on Instagram on a daily basis asking for help with their trading, there seemed to be this frequent pattern here where people either didn't have the time to be at the charts and they wanted signals, or people that have been trading smart money on the lower time frame, taking entries off the 1 minute or the seconds, and they've been doing that for 2 or 3 years, and they've been hopping from one community to the next, and these just still couldn't crack the code. And I'm thinking, is there a way that we can actually help these? So we came up with the strategy of taking entries off the 15 minute with a directional bias using the 4 hour, and we refined it and we tested it. We refined it and we tested it. And we just kept doing it until we had enough data collected that this made sense. And ultimately what we came up with was a trading strategy that us as traders ourselves and coaches, we actually prefer trading now too. Why? Because one, it increased our strike rate from 30 to 40% up to 67 to 87%. And it also solved a problem that a lot of traders, mainly our students or those that are struggling to trade, that couldn't find that consistency. They couldn't be at the charts for 4 or 5 hours a day. And let's face it, you don't get into trading to stare at the charts all day. Most people are starting trading because of the money. But if you think properly about it, what's the point in having lots of money if you're stuck sat at a desk, staring at a screen for 5 or 6 hours a day? No one wants to do that. Like, we all enjoy trading, but trading's supposed to be boring. It's not supposed to be exciting. So if you're taking 4, 5, 6, 10 positions a day, you're not doing it properly. You're likely gambling your money away. So if you can get to a position where you're taking maybe 2 to 5 trades a week and your strike rate is at least 50%, then one, you've increased your profitability and your strike rate. You've, two, reduced the amount of chart time, so you've got more freedom to go and do the things that you want to do. And 3, you've reduced the amount of chart anxiety that a lot of these lower time frame traders are experiencing. Now, a lot of you have asked me to run through some actual technical analysis on the higher time frame strategy, and I will do some. Obviously, I'm not going to go through the whole thing because that's in the mentorship, but I will run through this week. It's the 31st of March now. I've taken 4 live trades this week, 3 winners and 1 loss. So I have a 75% strike rate this week. It's been a really incredible week, and I've been extremely busy in the community with a launch. We're in London on Saturday. We've had all sorts of content being filmed and edited as of from Saturday, and we've been going through a lot of the backtesting results from our students. So we've had a lot of questions to answer. We've been busier than normal. And then from my own personal life, I have 4 children, for those that don't know. And there's been a lot of things going on, lots of meetings with the schools and lots of issues that I've had to deal with at home. Plus I'm renovating a house, almost finished, but I've been doing painting, I've been fixing shelves and doing all that sort of stuff. It sounds really busy and you're thinking, how the hell do you find time to trade? But with this I did. You know, you're spending 10, 15 minutes doing an analysis at a chart in the morning, and then the rest of the day is setting alerts and coming back when the time's right. It's basically 2 time frames, 2 pairs, 2 market sessions, and 1 entry model. And it's a set and forget, profit, execution style trade management. So you're not looking to move to break even, you're not looking for partials, you're looking for a 1 to 3 every single time, and you're entrusting in what the strike rate, the strategy brings. So for me, like I say, I had 4 trades, 1 was a loser, but 3 were wins. And I'm going to run through on the 4-hour chart now what those trades were and a couple of the confluences behind the directional bias and why I took those trades. So the 2 pairs that I trade are euro dollar and pound dollar. And I'm going to run through the 4 trades that I took between the 27th of March and today, which is the 31st of March, 2023. And these trades were all posted as analysis, pre-entry in the Discord as outlooks. I ran through on the live calls, many of these trades as well. And all of our students, our community members were able to see that these were either going to be a win or a lose. Like I mentioned before, there's no partials on this. It's a full 1% risk. It's a win or lose, set and forget. And we don't take any break evens. So I took 4 trades in total, 3 were winners, 1 was a loss. So 4 trades, 75% strike rate with a closing balance of 8% gain. So let me run through EU in the first position on this. So how we look at the 4-hour is for trade building based on momentum and liquidity. So we have a couple of rules we call no follow through and follow through. And I'm just going to quickly cover these. So if we start down here, we see this impulsive, very inducing sell-off here. A lot of smart money concept traders are going to be looking at a POI print here. And we see this as a trap. It's very inducing. There's no draw left behind. And a very inducing sell-off like this, especially when it fails to follow through to the downside, we can see it wicked here and it took buy-side liquidity. It wicked here. What does it do? It prints more buy-side liquidity to be taken. So we have a higher probability idea of the highs being taken when it fails to follow through, mixed with how inducing this move is, similar to the prior sell-off. So once we have a couple of candles close above, we have confirmed follow through. So our 4-hour direction or bias is bullish. So we're only looking for buyers at that point. There were some sells in here. I actually took a sell from in here on the previous week. And then what happened here? We had this, again, quite an inducing sell-off. Not interested in what's happening to the left. We're only looking at the 4-hour and the 15-minute. That is it. And only what we can see on the screen. So we do have no follow through to the upside, which was an early indication that we're going to get a pullback, but we're only looking for buys because 4-hour is bullish for us at that time. We use this fractal low, we trace it back, and we see that again, we get no follow through. The guys and girls in Evolution will know exactly what the technical rules are based on the follow through rule. But we knew that at that point, once we had this bullish candle close, we have a confirmed no follow through. And the 4-hour being bullish means, once again, we're only looking for buys. So the entry requirement on the 15-minute, it must be a 15-minute sweep. It must be a specific fractal low sweep, and it must happen inside one of our 2 London or New York kill zones. Then we set a 1 to 3, we cover our stop a couple of pips below some kind of protection zone, and then we just basically set and we forget. That's literally it. I'm not going to run through obviously the whole trade on the 15-minute and give it all away. If you're interested in learning how we use the 4-hour, the 15-minute for entry and the whole entry model, you will learn it within 4 or 5 days, and it's in the community. So have a look in the description below. There'll be a link. No pressure. If not, you can just watch the free videos, and I'm cool with that too. So the second trade, I'm still looking for longs. Why? What I've done here is I've stuck this premium versus discount on the current 4-hour range, which looks bearish to people that don't know how we look at our directional bias on the 4-hour. But if you remember, we are bullish, then we are temporarily bearish, but then when we get a no follow through, we're still bullish. So even though it looks like we've had this breaker structure, this impulsive sell off to the downside, we're trading back into premium to sell again. No, we're not. We're actually still looking for buys, but we're only looking to buy in discount. And we can see here that it wicks just back into discount during London Open. and then I execute the same exact trade. Yes, it looks different, but it's still a 1 to 3. The only difference is the stop loss is slightly bigger on this one, but they're both, this one's just under 3, but it was a 3 to 1, and this is the 3 to 1 again. They both hit TP. So they're the 2 winning trades that I took on EU. 2 trades, 2 wins. Let's move on to GU. So it's the same week, 27th to the 31st of March. This was 1 win and 1 loss. So same theory here. We're getting continued follow through to the upside, followed by no follow through, which is essentially a 4-hour liquidity sweep, and building the trade directional bias on the 4-hour as bullish. Simply the same thing. Once we've diagnosed what our 4-hour directional bias is, and we're making sure that we are still within a discount when buying, which you can see here, we look for our 15-minute entry model. What is that? It's a specific fractal low 15-minute sweep of liquidity during one of our London or New York kill zone sessions. We use a stop loss placement a couple of pips below a protected level, and then we set and forget a 1 to 3. So this trade was, again, London and hit profit during New York. And the same thing happened the following day, or the 29th. So we did have a lack of confirmation of follow through initially because we only had 1 candle close and it whipped back inside, but I'm not looking for sells when we are in discount. You can see this is a very small range, very tight range. So we've not really got much opportunity to sell in here, but that's counter trend move anyway. So once we have an NFT to the downside and with liquidation, we're looking for buys, and we're only looking for those buys in discount. Remember, so I wasn't looking for buys in this region. When it wicks the low, wicks the high, and we get no follow through, we can look for sells. But as you can see, it's only going to be a very short period, like literally the space of 4 hours. So there was no opportunity for me to sell at that point. But as soon as price came back into discount during a kill zone session and give me that lower time frame confirmation entry, or that 15-minute as our lower time frame confirmation entry of this 4-hour bullish leg, that's when I hit execute. And it just so happened that, you know, you're not going to have a 100% strike rate, even though this trade, just like all the others, were taken completely on plan. And I'm more than happy to take that loss. I'm actually happier to take a loss on plan than I am to take a winner off plan, because that's just going to instill bad habits by doing that. So yeah, we can see that the directional bias, the trade idea was correct. Price was bullish and we're likely to get a reaction to the upside in discount, but we just became liquidity that day, and that's just probabilities playing out. So thanks for watching, and I hope you took value from my first YouTube video. I do plan on doing this more often. I do enjoy it and I get asked a lot. So what I'd like you to do, if you've got this far in the video, is do me a favor now. Just comment below what kind of content you'd like me to produce for you later on. And you never know, your idea might end up coming into my YouTube channel. So let me know in the comments below what you'd like me to do next. And what I'll try and do is get at least 1 video out per week. So yeah, stay disciplined, stay safe, and I'll see you on the next one.